Hello guys, Eric Were here. Welcome to lecture 9 of the LifeVersity Forex trading course. I'm very excited to have you in this lecture as usual. And in lecture 9, we are going to look at our second technical trading tool, and that is trend lines. If you have not watched the introductory video all the way to lecture 8, ensure you check the links in the description. It's very important for you to watch all the lectures before you proceed with this lecture, because in this lecture you will only get to understand what I'm going to teach in here using the knowledge that you learned in the introductory video all the way to lecture 8. So ensure you do that right away before you proceed any further with this lecture. Let's just head over to our LifeVersity Forex trading timetable to see what we are covering in this lecture. As you can see, guys, according to our LifeVersity Forex trading timetable, week 2, we cover lecture 9. And in lecture 9, as I said earlier, we are covering the second most important technical trading tool called the trend lines. In part 1, we look at the introduction to trend lines, and then part 2, introduction to horizontal stroke remembered lines, and then part 3, how to trade using trend lines stroke vertical lines, and then part 4, how to trade using horizontal lines. The trend lines are a very important technical trading tool, and in this lecture I'm just going to introduce you how to trade using trend lines to ensure that you succeed in your foreign currency trading journey. And without consuming much time, let's just head over to lecture 9. As you can see, part 1, introduction to trend lines. If there's one principle I usually encourage traders to adhere to, is the KISS principle. That is, keep it super simple to be successful. In Forex trading, the less complicated your trading strategy, the easier it is to predict and follow a trend. You know, many traders tend to complicate things. They tend to throw in many technical or trend reading analysis tools to the extent that they end up confusing themselves. Some of them do it to just look sophisticated and complicated for that matter, but it doesn't really help, because you can look complicated but you're making huge losses. It is good to look simple and make huge profits in the foreign currency trading market. In the LifeVersity Forex trading course, I simply introduce you to three most important technical trading tools. Those are the moving averages, as we saw in lecture number 8, and then lecture number 9 we are covering trend lines, and then lastly in lecture 10 we shall be able to cover Fibonacci. Those are the three most important technical trading tools that are: 1, unambiguous; 2, they predict the direction of the trend; and then 3, they help you to define the risk. And the second simple but effective of tools I use, apart from the moving averages, that is the trend lines, as I said earlier. And heading over to our chart, in a previous lecture I was able to introduce you to the trend lines. Let's just view a chart here, and this is a live chart of the United States dollar versus the Canadian dollar. This is the 1 hour time frame, and as we saw earlier in a previous lecture, all you need for you to draw a trend line is to come over here at insert and then head over to objects, and then as you can see we can be able to draw a trend line. Alternatively, you can access the trend line on the menu bar over here. This landing line is the trend line, and the most important thing for you to know when handling trend lines is that there are different types of trend lines. Basically, there are two types of trend lines. There's an ascending trend line, that is when the market is uptrending, and then there's a descending trend line, that is when the market is downtrending. And within the uptrending and downtrending trend lines, we have also different categories of uptrending stroke downtrending trend lines. We have a major trend line, and then we have an inner trend line, and then we have a minor trend line. There are three types under each category, but basically what you need to know, we have two types of trend lines: an uptrending trend line and a downtrending trend line. And each trend line happens, for instance, when the market is trending downwards. Like as you can see in the chart, this market is trending downwards. We form what we call a descending trend line. It's landing downwards, and then when the market is trending upwards, for instance in this case over here, from here to here, then we form what we call an uptrending trend line. And to draw a descending trend line or a downtrending trend line, all you need to know is that you connect lower highs, and lower highs are simply these points. Like here you can see in this chart, this is a downtrending market. So in order for us to sketch a downtrending trend line, we simply are able to connect our lower highs, and lower highs are these points over the candle, the top of the downward trending candles. And plotting from here, this is basically the highest point. I'll try connect the lower highs. As you can see, that is particularly one trend line. Connect all the lower highs over there. There we go. So that is an example of a trend line. I may have not drawn it perfectly well, but it can be used for illustration purposes because I can see some candles being crossed. But basically, I'll use this one to explain how you can trade using the trend lines. And now, as you can see, this trend line is landing downwards. It is a downtrending trend line, and it is drawn by connecting the lower highs. Now, the psychology of trading using a trend line is very simple. For instance, for this downward trending trend line, all you have to do is to ensure that when the price touches the trend line, this is a slanting trend line, and the price is below the trend line, that is an opportunity to sell. And when the price is above the trend line, that is an opportunity to buy. As simple as that. For instance, as you can see over here, when the price here, it was consolidating over here, as you can see in the screen where I'm pointing the arrow, and then upon touching the trend line, there was some kind of breach or breaking of the trend line over here, and then it was a false breakout. Then the market tended to deflect from the trend line, but as you can see, directly below the trend line on this red candle, there is the 50-hour moving average. So that 50-hour moving average acted as a point of support, and there was some kind of non-trending because the price could not break the 50-hour moving average. Then when the 50-hour moving average was broken, there was some sort of a downtrend, and then a deflection over this on this candle here. It hit the trend line and then didn't break the trend line. It came back and it kept dropping. So as you can see here, when the trend line was touched and was not able to be broken, the price usually came below the trend line, and that meant it was an opportunity to sell. So for sellers who sold over here using this trend line were able to make profit. Traders who went short, for that matter, and then over here the price reverses and starts going up. So for buyers who bought over here, let me just draw a horizontal line over here. They were able to make profit until the trend line was broken, and then the 50-hour moving average acted as a point of resistance. The price couldn't break the 50-hour moving average, and then it deflected back, broke the trend line again, and kept going lower and lower until at this point another horizontal line, until it reached this point over here, that is 1.31572, and now started going up again, broke the trend line all the way, and then over here at price point 1.32042, it started dropping again, broke the trend line, and now it's non-trending. There's some kind of support over here. Let me draw another trend line over here. There's some kind of support. The market is consolidating at 1.31808, and it will either break and keep going low or keep going high. As you can see, our trend line is still in place and the market is now trading on that trend line. If you're selling, you put your stop loss slightly above the trend line, and if you're buying, you put your stop loss slightly below the trend line. That is a safe trading zone to ensure that should the market reverse opposite to your trading direction, you are not able to burn out by making huge losses. You can make a loss of a few pips and then recover that when you open a position in the direction or in the proper direction of the trend. And then there is an upward trending trend line, and for that you connect your higher lows. And higher lows, for instance, here as you can see in the desktop version, for the higher lows, like from this point over here where I'm pointing the mouse all the way to this point, the market was trending upwards, so you connect the higher lows like this all the way to this place, and there you're able to have your upward trending trend line. The same thing applies for the mobile version. The point here is for both desktop guys and mobile guys, this is how we sketch trend lines. There are two types. For a down trending trend line or descending trend line, we connect our lower highs, and for an uptrending trend line, we connect our higher lows. As simple as that. The higher lows for an uptrending trend line, and the lower highs for a downtrending trend line. As simple as that. Let's go back to the notes and see what we have over there. In part 2, guys, as you can see, we have basic trendline trading rules and how to trade using trendline. And as I shared with you earlier when we were sketching the trendline, there are basically two rules. If the price is above an upward sloping trendline that connects higher lows, the trend is bullish. Traders should use that trend line as a buying opportunity when the price is tested on dips. And then secondly, conversely, if the price is below a downward trending trend line, or a downward sloping trend line that connects lower highs, then the price is bearish and traders should use that trend line as a selling opportunity when tested. As simple as that. In the document, you'll be able to get a good example, but if you watch this video from the beginning, you should have a pretty idea of how to sketch trend lines on your MetaTrader 4 or 5 chart, as we did it for both desktop guys and for mobile guys. You should have a pretty good idea of how to go about it. But to just top up what I've taught you here, go over the first example in the document, and then we have the figure there. You will be able to see how to do it. And then we have a second example again, illustrating a downward trending trend line or a downward sloping trend line and how to sketch it by connecting the lower highs. In example 1, we have an upward facing or upward sloping trend line where you connect the higher lows. That is how we do it. Just to reinforce everything you have learned in this lecture, ensure you go through the document to ensure you get everything. And then part 3, introduction to remembered lines, and I have illustrated to you remembered lines. We've used most of them. We have two types of remembered lines. We have horizontal lines and vertical lines. Heading back to our chart, you can see under insert objects, we have horizontal line and vertical line. For instance, if I want to find out the price where this red's slanting line, that is the 50-hour moving average, was crossed by this big green candle, I just come over here to the horizontal line on the menu bar. Alternatively, under insight, I can go to objects and get a horizontal line. I simply tap on the horizontal line, whether up here on the menu bar or under insert objects, and then I come over and then I can be able to sketch that horizontal line over here, or a remembered line for that matter. And all you need to know about remembered lines, as you can see in the notes, is that at the beginning of the lecture I explained how to draw a trend line, and we did that, where we found out how to sketch the two types of trend lines, that is a downward sloping trend line and an upward sloping trend line. And in this lecture we are just going to draw another type of line, where I call it a remembered line. That could be a horizontal line or a vertical line. And remembered lines are very important because they are very vital price points, where they are able to indicate when the market is consolidating or non-trending. Again, we can be able to realize whether that point is a point of support or a point of resistance. That is the most important part of remembered lines. And I use remembered lines alongside trend lines because trend lines are able to define the market when it's trending. I can be able to draw a downward sloping trend line or an upward sloping trend line when the market is trending. But there are moments when the market is non-trending, and that is the time I use a remembered line, where there are two types. We have a horizontal line and a vertical line. For a remembered line, for instance, at this point, as you can see, my 50-hour moving average, at this price point, there's some sort of support when the price was trading above the 50-hour moving average. As you can see, when the price hit the 50-hour moving average, it deflected higher, and that simply shows that this acted as some point of support, and that is my horizontal line, the remembered line, at point 1.32344. That is on my USD card 1 hour chart. And when the market broke that horizontal line or the 50-hour moving average, as you can see, it was now an opportunity for sellers to come in, and the price kept dropping up to this point, that is 1.31936. From that point, the price deflected high above, and this remembered line 1.32284 acted as a point of resistance, where the price couldn't break this line, neither could it break the 50-hour moving average, and for that matter, it kept dropping lower up to point 1.31572. So remembered lines, as you can see, are very important, especially in non-trending markets. And in this lecture, I'm simply going to reveal to you how to be able to sketch it. As you have seen, both remembered lines and trend lines are very important trading tools, guys. And as you can see in the notes, you can be able to go through and just ensure you fine-tune everything you know in this lecture. In part 4, how to trade using remembered lines, as I illustrated for you for both mobile and desktop, guys, you simply sketch your remembered line, whether horizontal line or a vertical line, at a point. And for instance here, when this price broke this horizontal line, it consolidated over that horizontal line at point 1.32344, and once that horizontal line was broken, it was an opportunity for sellers to come into the market. And as you can see, those who sold at this price point were able to accrue some profits. So you can be able to sketch your trend lines and remembered lines, and are able to analyze the market in order to ensure that you follow the trend, and you define your risk, and most importantly, you accrue as much profits as possible. So when the price goes below the trend line or remembered line, it's an opportunity to sell. And then when the price gets above the remembered line or above the trend line, is an opportunity to buy. As simple as that. And you can be able to define your risk, in that when you are selling, you place your stop loss slightly above the trend line or remembered line, and when you are buying, you place your stop loss slightly below the remembered line or the trend line. As simple as that. That is everything that is in the notes about trend lines and remembered lines in lecture number 9. Ensure you go through the document. There are examples there you need to follow and compare with what I've revealed to you in the video. That's it for this video, guys. See you again in the next video, that is lecture number 10, where I'll be talking about the Fibonacci retracements, another very important technical trading tool. Ensure you open your email tomorrow for you to watch the lecture on Fibonacci, that is lecture number 10, combining these three technical analysis tools, that is the moving average, the trend lines, and the Fibonacci, will ensure that you master the market and you maximize your trading opportunities in the market by making huge profits, by being able to identify the direction of the trend, being able to define your risk, and most importantly, using a tool that is unambiguous. Until next time, guys, stay safe. See you again in lecture number 10 tomorrow. May God bless you.